Yeah, they grow old so quickly.
Yeah, it's my daughter about 2 months ago said, Dad, just think you only have two more first days of school with me. And I went, really? Is that what you're saying? Come on. So
I know. I know. And they're so now it seems um as well. So, but yeah, kudos to you. It's like the days just keep rolling on and it's been I didn't realize that you had joined that other place back in 2011. I think I came in 2012. So I must have come shortly after you.
no, I think I was after you.
For you? So maybe
Yeah.
it was 2011, June of
Yeah.
2011. It must have
Yeah.
been.
No, I was still with Equifax up until 16. So it was 16 when I joined them.
Oh, okay, gotcha.
Mhm.
Gotcha. Yeah, I think I was 2012. Could be wrong. I've been here almost 5 years.
Awesome. I know it's great.
Like impossible. And you guys have been with us. Hey, I guess I should thank everybody. Thanks for joining us. We're going to give it just another quick second before we get going here. But yeah, you guys joined us from Trinity Oaks in 2020.
Yep.
So it's like it's been 3 years already, which
I know.
seems impossible. So
Um,
appreciate you all for joining us today on this day 4 of 12 days of TMC. I am lucky today. I have with me someone I always love to get. We don't talk very often, but when I get caught up with him, I always love the conversations that we have. So we have with us today Michael Kuentz, who is the president of Trinity Oaks Mortgage. Michael, thank you for being willing to do this with me today.
well, thanks for having me. And because I know it's the 12 days of TMC and apologies to any Florida State fans out there, but I'm going to be in the spirit. So no, I'm happy to be here, and thanks for including us.
Yes, of course, of course. So I was just hoping, I know, obviously you're a Texas. We have a number of other people, I believe, on here who are probably in the same camp. I know of at least one on here that you are, but I was hoping that we could get you to at least share with us what your favorite holiday song is as we get rolling here. For those of you who don't know, Michael is like Garth Brooks. That's who I would equate you to. So
Well, thank you. Yeah, so and there's a lot, but and this is not really a song. It's more just a seasonal song that comes around. It's the Trans-Siberian Orchestra. It's the Carol of Bells, I think, but I just love everything about that. It's just a powerful song, and of course, they begin to play it now, so it kind of takes me through the entire season.
yeah, that's a good one. That's a good one for sure.
Yep.
Share with us a little bit. Well, before we get started on that, just so that people on here know, if you're just joining us for the first time today because of 12 Days of TMC, the Last Week in Mortgage Today is a show that we do every Tuesday, even when the 12 Days of TMC is not going on. So please check out our event calendar and register, and then also subscribe to our YouTube channel in case your schedules don't allow you to attend in person. And you can come back and get information from us on what's going on in the industry every Tuesday featuring one of our great lender members. So please do join us for that. Michael, would you share with us just a little bit about Trinity Oaks and kind of like you're in a different model than some of our other lender members are. So if you can kind of give us a little bit of background of that as we kick off things here, I would appreciate it.
Sure, sure. So Trinity Oaks Mortgage is a part of what we call a family of companies. John Houston Homes is a fairly sizable builder in the North Texas area, kind of in the, I would say more Dallas side of the DFW Metroplex, but then we also build further down into the Waco and Temple area. And we've got a model that's inclusive of land development, the home building company, we've got the mortgage company, we've got a title company, design company. So we've kind of created I don't necessarily call it a one-stop shop, but it's certainly an opportunity to create an experience for a customer that is all inclusive. And so that was really the design and really the thought behind John, the namesake of our company. And so Yeah, it's a model that we're pretty fortunate to say we're a part of, given the current state of the industry. It's nice to always have a home builder, even despite some of the challenges that are even in the home building side. It's nice to have that because we typically pick up the financing on a high majority of those. So it is a unique model. It doesn't necessarily stop Trinity Oaks from wanting to grow beyond that, but it's certainly a nice backstop for sure.
You're there. I think if I remember right, when you joined them, it's like, oh, they're going to grow that business now into something different. So tapping into your skill set differently. You're also a little bit different because of the culture of your organization, and it's a great time of the year. And correct me if I'm wrong, but Trinity Oaks is more of a faith-based company,
Yeah.
where a lot of us in the industry are very passionate about the people that we serve, but that definitely would be true for Trinity Oaks as well, as being a big part of your culture, serving
Yeah,
people.
no, it's everything to us. So, our mission is to reach people for Christ and to give to the kingdom. And so that is truly a part of our mission, and one can't be done without the other. So we obviously want to be outreaching. That could be people within our organization, or certainly the customers that we come across. And then, of course, we do give over 20% each year within all of our businesses to, we kind of earmark whether it's international, whether it's domestic or even local opportunities for us to give to. But yeah, it's the heart of our company, and our kind of our brand vision is to be joyful, hope-filled, loving guides as we walk them through whatever process it is. If it's home building, great. If it's the mortgage process, so the hardest part about that is to say that's who we are, but then for the customer to not experience that. So the heart of what we do every day is really mission critical to us. So, but yeah, it's a big reason why I stepped off of airplanes and traveling all over the country, because I knew the mission was much bigger than me and much bigger than just simply bottom lines. So.
Absolutely, absolutely, and a good thing to have. Not even just not in your back. I say in your back pocket only because that's the phrase that comes to mind, but not in your back pocket in an environment like the one that we've been in. Knowing and being hopeful about what is coming. I would think probably helps a lot of people organizationally. For you, just trusting in that things are going to turn, and it's going to be a little bit different than maybe what the last year was. I'd love to just chat with you a little bit about the whole being a home builder, supporting a home builder right now. And I mean, everybody thinks of that as, oh, that's the answer to, the supply situation that we have. There are a lot of challenges in that home builder space. So I would love to just kind of hear from you, some of the things that you've experienced this year, having that tie to a home builder.
Yeah, no, absolutely. And I'll just go back to the previous statement because, to your point, we've not been immune to what's happened in our marketplace, right? And so, we certainly wish that none of that would have happened, right? That these overcorrections would not have happened, because, there's a lot of good people out there that are not a part of our organizations anymore, and so we wish them the very best and pray that they've landed and things like that. But, to your point around the home building business, they are also not immune. So whether it be supply chain challenges that we went through during the COVID season, or whether it now be just the interest rate environment to be able to draw people out. So, the learnings, I think if you look at kind of the blocking and tackling, the supply chain issues have somewhat moved on. We're not as challenged. Now we do have, some municipality challenges that we come into when we've got different lands, wherever our land development might be. But for the most part, we've been able to maneuver through those. It's been a big undertaking and I think that's been a part of our strategic change. We were a custom builder. We're no longer a custom builder. We really want to build a home that is going to be able to be built in that 8 to 10 month time frame. It's still a beautiful home. It's a great home, and it's really what the marketplace is desiring right now. But at the same time, we can't be all things to all people. And so that's been a bit of a foundational shift too, in terms of the expectations that we set out, into society, but also even the expectations of our own sales organization, whether it be on the home sales side and even into the mortgage space. So it's been a bit of a kind of a mindset shift to go from, yeah, certainly we can do that and make the last minute change order and et cetera, to no, that's not who we are anymore. We're gonna build something that's a little bit more, what do they call it, track custom, but yet still a very nice home. But no, I think overall the challenges that the home builders are experiencing now are the risks of spec to true build ratios, right? And we were in a season where the right thing to do was to help the supply challenges and to be able to go out and put more specs out in the marketplace. Well, as quickly as that's a great idea, it can also then become a risk, because you've got warehouse lines now that are saying interest carry is going to go up, and we don't want to have that risk necessarily exposed. So we need to get those specs moved. So now that's the new season we're in, because now it's all about, let's get to those starts, because we've got a better cost model, and there's more things that we can do. So
From some to more of, track environment where you can still create a beautiful home and everything, kind of reflects maybe on what is out there in the marketplace out there, that you're trying to supply a greater value in your home when it's not custom to people. That's something that's missing right now. The cost to build a house has really increased a lot. And there just isn't a lot of affordability out there. So I would think that would help with that mission in the marketplace that you're in. And
yeah, and I just would, that, to your point, a $350,000 house that we sold in 2020, or even with some appreciation in 2021, is now a $550,000 house. So couple that with a 7% interest rate, or 7.5%, or what have you, it's tough to swallow. And so we've even had to go in some different directions in terms of diversification. So one of the things that we did as a company, which the original intent has completely shifted, but we got into what we call the single family attached, or the townhome business, and started building those as well. Now, that starting price point, what we thought was, well, these are going to be folks retiring and wanting to downsize, and they're going to land their plane, lower maintenance, et cetera, et cetera. Well, guess what? It's actually become the first time home buyer drumbeat, and that's where we're starting to see a lot of those first time home buyers is getting into some of our townhomes to get them from the rental game into the owning game. But yeah, so it's that balancing act, and that's where I think the power of Trinity Oaks, along with J. Houston Homes collectively, can be a difference maker, because we've got our Fannie ticket, we've got the ability to go and take out some forward commitments and really utilize seller contribution, along with things that we can do on our side to take what's a 7.5 or 8 and get it down to a 4.875, and that starts to be pretty attractive. So you do draw out those buyers, and you talk about dating the rate or marrying the rate. Well, we're saying you can marry that, because it's likely that's not going to go anywhere in a 2 to 3 year period. So we can, so that's been a good strategy for us.
It's funny that you say that, because I found myself in a situation last February where I made a quick move, didn't plan on doing it. It was right when rates had started to go upward. And I did that exact same thing. So I've got a builder, it's a builder that's in our network, that's a smaller builder. And that's how I found my house, by calling them and saying, I can't find anything on the market. I know you sometimes have specs. What can you do for me? And they had one left. And so that is exactly, and it's a townhome, and I love it.
Great. Yeah. Well, so I think it's, people going either from the renting game, or maybe they want to move up. The newness, the freshness, the colors, the granite, all those things that they may not have today. And then just being able to get them to an interest rate that's consumable. And, that's a hard thing, but I think it as a package, we certainly have that attractiveness maybe versus some others.
all the things that I wanted or I thought that I wanted. And you know what? It doesn't matter. In the end, it's like
Exactly
it
right.
that rate mattered more to me and just getting moved. And so I think that there's a lot of that out there. I think that people would find that there's a lot of that out there. People always think they know what they want, but the reality is when you're in a housing situation and you have to move, it really becomes much of a more scaled down version of, is this acceptable to me? And do I love the community that I'm moving into and the
That's
people that I'm going to surround myself with?
no, that's
Uh,
100% accurate. But I think just like everybody in this call would probably agree with me on, we're in the business of making loans, and we're in the business of helping people reach, reach that opportunity of the American dream and what have you. So, our job is to educate them on why now. Because if we do forecast ahead, because I think we've all said every economist in America was wrong 2 years ago, a year ago, but hopefully they're now starting to get smart again. I think they are. But I think the idea is that we need to be educating buyers on the fact that there is going to come a time where if you're not in this game and you're not taking advantage now, that supply could dry up. So, let's get into this home. Let's get you in there, and then let's find ways in which we can work that rate down over time. So,
yep. You're in Dallas, Fort Worth, in that particular market is where you reside. Texas has always seemed to me to have more stability and not quite as up and down. But what you just mentioned was interesting to me. So are you seeing now in your market that you are having some of those more dramatic swings, I guess I would say, in pricing and things? Because I've always associated Texas with kind of having much more of a stable flatness
yeah,
to it.
yeah. Yeah, I think the coasts are always going to experience the bigger pops naturally, whereas we're going to be kind of steady Eddie through it. But we are also seeing people we're coming off our pricing, right? Whether it's something we've had out there listed in the community, we're slashing prices as needed to move homes. But I think as a whole, and as the Dallas Fort Worth in general, it's still going to see a positive appreciation on a year over year basis. And I don't know if even if you look ahead and there may be some depreciation, slight depreciation maybe in 24, I think we're still going to see some stabilization. In our business, obviously, a national average on an average loan balance may be 375, whereas we're running somewhere north of 450. So it's just so that's kind of the market that we're in. But I do think in the need to move homes right now, and to be able to not have that massive interest carry that warehouse banks are de-risking themselves with, and us de-risking, we've got to move them. So we try to find the balancing act there. And I'll just kind of breaking news from a Trinity Oaks perspective. We've been working very hard behind the scenes to become a part of the employee stock ownership program of the broader company.
Fantastic.
And so we finally gained alignment approval. We got our non-objection letter from Fannie Mae. So we're going to be moving forward with that. And so we feel like that will be a great, obviously a great pathway forward for Trinity Oaks, but also what we call ourselves as the household group now. And so being a part of the single kind of entity view with a common mission of being able to make it easier to do business with us, ways we can optimize our own performance, but certainly ways that we can show a better customer experience. And then, naturally we see growth opportunity with that. So.
Yeah, that is fantastic. That is fantastic news. Fresh off the press. So let's switch up and talk a little bit about credit reports or credit reporting in 2024. Some news has come out over the last couple of weeks that we're going to experience higher prices in that credit front again. A lot of people within our network had kind of changed a lot of their policies with either a tiering or waterfall pricing with soft pulls that are now maybe going to have a little bit lesser impact because the soft pull pricing is what is really going up. Talk with me a little bit about like how you've dealt with that, if you see any new strategies out there related to that. And we'll get into trigger leads a little bit after that.
Yeah. So, you know, in the positions I've held in the past, you know, I know a lot of folks, and you know, you may be able to pull some strings here or there with vendors, but unfortunately, you know, we're not the 800-pound gorilla. We're a small lender. We're a small, you know, really Dallas-Fort Worth based lender. If we're being completely honest, we do some business here and there outside of the immediate metroplex, but you know, we don't swing as big of a stick, obviously. And so we've been experiencing a lot of this, whether it be credit reports or any other. So we've had to certainly make changes and pivot accordingly. But to your point around, you know, the soft pull versus the tri-merge, it's needed to become not just best practice, but almost a staple in what we do, because when you've got buyers that are coming out that either have to move or it's a, you know, we just got to do it. You know, what you don't want to do is burn too much real estate in that process and you figure out you can't do something. So having the soft call up front and then being able to move into the tri-merge has become a better overall business model for us. And yes, I think what it does is it gives you the answer you need up front right now versus finding out through the process, because you know, we are all experiencing, I think, a little bit more fuzz on the deals than we've seen in the past. It's not necessarily going to be, you know, the run of the mill traditional borrowers, and that's okay. That's a good thing, because we're opening up and starting to see folks that are looking to transact. But at the same time, we've got to be able to create the right expectations up front, because we don't want to get all the way to a, you know, where we're down to the wire and we're not able to do something because of that. So the waterfall has become key for us. Yes, it's added expense to the model, but I think it's cut off, you know, the opportunity to know more upfront through the process, whether or not that's an opportunity that we're going to be able to do versus maybe somebody else.
And of course, using, you know, soft pulls are being used a lot, not just for like, they weren't just being used that way for cost. I mean, you give a very valid point of knowing more about what's going on up front, but soft pulls also were being used to prohibit the whole trigger lead situation that has been going on. And I thought it had tapered a little bit, but I was having a conversation with one of our lender members this past week, and they said they had, you know, someone that was hit with 147, you know, phone calls and emails, and within a matter of hours after having a credit report pulled. Director Chopra came out just this past week and said the CFPB can't be much help in this situation. So I know that there's a lot of things I've heard, and Texas, I think, is one of those that has been looking at some legislation things related to trigger leads. So, I mean, kind of what have you seen with that particular topic?
Yeah, I mean, it's, you know, I think your point is right. I mean, that's one of the prohibitors if you are utilizing the soft call up front, and we try to educate our LOs that just get in that natural habit of pulling a tri-merge and moving on down the road. It's really, you know, it's kind of a preventative defense mechanism, if you will, to try to salvage as long as you can before they start getting dinged, you know, literally that afternoon. And it's been a problem even in our home building, because what happens is, you know, when we're out there and we're pulling these forward commitments and we've got cost on the line and there's seller contribution, well, guess what? Now they're leveraging that seller contribution that they had with Trinity Oaks as a you know, package deal. But gosh, I was able to have somebody else give me a call, and now all of a sudden, you know, they're a half point better, or et cetera. So it is absolutely, I think, a defensive play. You know, we are fully supportive of what CMLA is doing, and we want to continue to be supportive of many of the advocacy groups out there. But I think it's just a recognition that this is just a part of doing business, and you know that it as tough as it can be to be bombarded with, you know, a magnitude of calls as a borrower. It is what it is until it changes. It's unfortunate that the CFPB didn't step up and do more in that regard, but at the same time, that's why we have these partnerships to continue to press and see if we can't move the needle more and more. So I'm confident that over time, these things work themselves out. And of course, we may get into a new market here very soon where those are something we want, i.e. the refinance, right? Because that's going to become more prevalent here, maybe in the next 6 to 12 months.
That is very true. And thanks so much, Seth Collins, in the chat. I'm glad to see that you're on here, by the way. They've seen a recent resurgence in their experience with that. So maybe renewed solicitation season for some people. And Jessica Zentz put some information in here, and I'm not familiar with these terms. But they use a drive report with an active UDM report for new alerts. So no longer needing to do a soft poll. So thank you, Jessica and Seth, for those comments for sure. I think that one of the things that the CFPB has said that they would be willing to do is make sure that it's known out in the industry that lenders are not the ones that are necessarily prompting a lot of those. They can't help with reinforcement or taking enforcement, but they may be able to make it really clear in some things that they're doing that it is because of the credit being pulled. It's not the fault of the lender, that because the lender pulls a credit report, that kind of gives your borrower a bad taste in their mouth, thinking that it was something that you did.
We originate,
lead them to go somewhere else. So I think that that would be good. And thanks for the tutorial today. I'm always looking to learn new things. Undisclosed debt monitoring. Thanks, Jessica, so much for that education for faith today on the show. So
And your employer, Equifax, at it again. So UDM.
Yep. Also, this last Tuesday, new loan limit, FHA issued new loan limits. This last week, they continue to rise. I don't think that's any surprise, probably to anybody there, just because of some of the things that we have talked about on this call, and costs raising and loan amounts raising and all of those things. So if you haven't seen what those are out there, those came out this last Tuesday. We're in the 5th week of home purchases increasing in the United States. So longest stretch of gains, I think, since March.
Yeah, I think that's right.
Here. So like, have you kind of seen a new, little surge?
Little pop? Yeah, no, it's good. I mean, I think we're very a shot in the arm, right? So I think, I know on the home building front, we've got that kind of data study that we do pretty regularly, monitoring traffic, et cetera. But to see our retail folks starting to get that pickup again and really just gaining some confidence, right? I mean, those are the folks that are out there kicking the tires and, reinventing themselves and really working their tails off to make a living in a tough market. And I commend each one of them, because this is as difficult as it's been, and so to hear the good news where we get excited about a deal again, right? And so it makes you appreciate things just that much more. And so I like the fact that loan limits are heading north, because what that means is there is an understanding that there's an appreciating market. It still doesn't solve for the fact that we're still missing a part of the population that needs to be served. And so, we've got to get the interest rate environment. I've been a fully supportive person of what Dave Stevens put out not long ago and kind of his proposal around the excess. I think that is absolutely what should happen. I hope that there could be some movement on that, because I do think it would bring about some movement in the market that is much needed, and it'd start to open the door to, really folks that are sitting on the fence that deserve an opportunity to get in the game. So,
and we're like large fans here at TMC. There's so much negativity that if you watch, like for this show, looking at the news headlines, sometimes it's like we don't need that. We need to like head in the other direction. There's some really positive things. If those of you on the call don't know, but you have people who are interested in kind of reinventing themselves or learning how to sell in this type of market, there's some things that we can help you with through TMCU here. We've got some great programming for those LOs who maybe are struggling a little bit. And you're right. They're the people that have boots on the ground every day. Many of us do as well, but they're directly impacted by the consumer. Some of them have been very heavily financially impacted. And to keep going as a salesperson in a market like this, it's really difficult some days. So kudos to you for like showcasing those people and highlighting those individuals that are working really hard. Find it hard to believe, but we're at the bottom of the hour already. Always great to talk with you. Appreciate everything that you do with us, for us within the TMC family, and hope to catch up with you sometime soon.
Yeah, no,
Thanks,
I want to thank you guys too. I mean, it's first of all, what you're doing is exactly what needs to be done, is bringing lender members together in this community and sharing ideas, and especially in times like this, and certainly keeping our eye on those folks that we hope will land. And we appreciate what you guys do in that regard. But no, thank you for your partnership. Thank you for being a strong voice out in the marketplace. And yeah, so
means a lot to us. Means a lot to us, Michael. Coming for you makes my heart very happy this afternoon. So for those of you on with us, join us. If you haven't been involved with our, we're doing something new this year. We're doing a solution sprint. It starts this afternoon. Join us for that. And then of course, come back tomorrow for day number 5 of the 12 days of TMC. Thank you so much, Michael.
Take care.
Have a happy holidays.
Yeah, you too. Merry Christmas. Bye-bye.